and welcome back. It's Jason Walter here, and here's your latest housing market update. This is a weekly video I make for you guys based on my own analysis of Realtor.com's data. So just like my previous videos, I'm not going to share their analysis, which I actually didn't even read. Instead, I'm going to provide my own analysis of their data to kind of gauge where we're at in our US housing market. So in today's video, I'm going to give you guys an update regarding home prices, housing inventory, new listings, days in the market, and much more, as well as price reductions. So let's go ahead and dive right in. I have a lot to share. And also, by the way, happy Friday. Thank you so much for joining me in today's video. All right, this is according to data from Realtor.com. Here's their analysis, which I did not read because I'm a total nerd. Instead, go to Realtor.com/research/data. It takes you to this website right here and click on this link right here, like I mentioned in all my previous weekly videos here. It takes you more or less to this Excel spreadsheet, which I have really nerded out today. So the most recent trends we have is actually for the week ended March 4th this year. Let's first talk about asking prices. So the median asking price in the US. And of course, a big caveat, of course, every housing market's different, right? I'm talking about on a national level, what's happening right now with our US housing market. For asking prices, last week, they only increased by 6.3%. This is actually the smallest year-over-year increase going back to June 20th of 2020, right after the onset of COVID, the smallest increase in asking prices nationwide. Additionally, for the past 12 weeks in a row, we've been seeing single-digit increases of asking prices in the US, which of course means that every single week this year, we've had increases of asking prices by less than 10%. And last year, for example, every single week we had double-digit increases except for the last 4 weeks of the year. So in December 2022 was the first time we saw single-digit increases in asking prices in at least a year. Let's also talk about housing inventory, or the number of houses for sale in the US, because here's actually a new trend, because the previous trend was increases on a year-over-year basis for housing supply. But we're actually seeing just the opposite right now. This is actually a new trend I'm sharing in today's video because the growth rate of housing inventory has been decreasing in 4 out of the last 5 weeks. The growth rate on a year-over-year basis has been decreasing in the last 4 out of the last 5 weeks. And last week it increased by 61.1%. Which, by the way, this is actually much less than what AltosResearch.com is reporting, because they're reporting inventory gains compared to 12 months ago, an increase of 74%. 1 year ago, there was approximately 240,000 houses for sale, and for the week ended March 3rd, approximately 419,000. So an increase of about 74% compared to 12 months ago, whereas Realtor.com is reporting gains of around 61%. And I mentioned that a difference here because I report multiple sources on the channel regarding what's happening right now in the US housing market, rather than just providing analysis based on Redfin's analysis, for example. In any case, just want to point that out. A difference are around 13 percentage points in the amount of housing supply compared to 12 months ago. In any case, let's talk about new listings, because new listings decreased by 26.1% last week. That's a significant decrease compared to last week. Last week, we only saw a decrease of 15.6%. So huge decreases of new listings compared to the same time frame in 2022. And this 26.1% decrease of new listings is more or less on par with what Redfin's reporting as well. For Redfin, they're reporting gains, or actually decreases, by 21.7%, a decrease of about 22% in the number of new listings compared to the same time frame of 2022. One thing I do want to mention, though, is when you actually look at this column right here, new listings decreasing compared to 1 year ago, it appears that new listings are going down. In fact, though, they're actually increasing, but not as fast as last year. I want to explain this very quickly here, because new listings really shot up in January, but they're increasing still, but not the same levels. So ever since more or less, January 29th, new listings have been increasing, but not as fast as what we saw back in January this year. And in fact, when compared to 1 year ago, look at this, because for the week ended January 29th, there was a decrease by 17.7%. And that growth rate was increasing throughout February and also as of March as well, now down by 21.7%. A lack of people listing their homes for sale, likely due to the fact that people do not want to sell their house given that the housing market has slowed down, and of course because rates have increased so much. Rates right now are around 7%, whereas back in 2022 at this time, rates were hovering around 4%. And speaking of that, let me give you guys an update regarding rates right now, because according to the Mortgage News Daily, as of today, which is the 9th of March, average 30-year fixed for people with great credit, it's at 7% right now. FHA and VA is around 6.50%. Also compared to 1 year ago, rates were about 4.24%. This means that rates have increased approximately 276 basis points, or approximately 2.7 percentage points compared to 12 months ago. Something else worth mentioning as well is that rates have been hovering around 7% for the vast majority of March as well. All right, let's get back to Realtor.com's report here and analysis. So again, down by 26.1% for new listings, but also based on my own analysis right here, new listings have been decreasing for 6 consecutive weeks by double digits. For 6 consecutive weeks have been decreasing by at least 12.7%. On top of that, as a note right here, new listings have been declining by more than 10% for 30 out of the last 32 weeks. As you can see right here, decreases by double digits in 30 out of the last 32 weeks. The only weeks we saw single-digit decreases was actually for January 21st, as well as December 24th last year. Additionally, we've been seeing fewer new listings compared to the same time frame of 2022 for 35 consecutive weeks, as you can see right there. A decrease of new listings for 35 consecutive weeks. What's remarkable regarding this is that even though we've been seeing fewer new listings compared to 12 months ago, housing inventory has increased by 61.1%. and also an increase of 74% according to altusresearch.com. What this is telling me is that this increase of housing supply compared to last year is really due to a pullback in home buying demand as houses are taking longer to sell, and we're seeing fewer contracts being signed between buyers and sellers. So speaking of days in the market, or how fast or how slow houses are selling, last week days in the market only increased by 18 days. This is actually the second consecutive decrease of days in the market. In other words, it's taking longer for homes to sell right now compared to 2022, but has been decreasing for 2 consecutive weeks now. 18 days was the most recent week we have right here, or an increase of 18 days, I should say. Also, it's taking longer for houses to sell in the US compared to last year for 31 consecutive weeks. And again, a friendly reminder, when talking about days on the market, this is based on closed home sales. Therefore, this is a lagging indicator what our housing market was like 1 to 2 months ago. Let's also talk about the number of reduced price listings compared to 1 year ago, because that has been decreasing for the 4th consecutive week. As you can see right here, decreasing for 4 consecutive weeks. However, having said that, we've been seeing triple-digit gains in the number of reduced price listings for 16 out of the last 18 weeks. So that was the number of reduced price listings. Let's also talk about the share of reduced prices. So according to altusresearch.com, for March 3rd this year, the share was at 31%, meaning approximately 3 of every 10 houses for sale right now have reduced their asking prices at 31%. Going back to mid-November, the share was 43%. Therefore, the share of reduced price listings has decreased approximately 12 percentage points over the last 4 months. On top of that, the share of reduced price listings are at the lowest levels going back to July last year. But we're still much higher compared to the same time frame in previous years, which will share with you right here. All right, so price reductions right now, again, at 31%. The lowest levels going back to more or less July 1st last year. However, having said that, we're still have been decreasing ever since really mid-November this year. The share price drops going from about 43%, now they're about 31%. However, though, when we comparing this to pre-COVID levels, look at this. Let's look at last year actually. 31% Last year was at 17%. 2 years ago was 16.8%. And pre-COVID, right before COVID, back in March of 2020, the share was 25%. 2019, 27%, and in mid-March 2018, the share was approximately 24%. So even though the share has been decreasing ever since more or less December last year, we're still much higher right now compared to the same time frame over the past 5 years. Now, before I share a summary of today's video and also kind of share some predictions of what may lie ahead, I also want to compare how this last week compares to years past. I only can go back to March of 2018 because Realtor.com's data only goes back to July of 2017. So over the past couple of years, we've obviously been seeing a huge uptick in home prices and of course, huge decreases of housing supply as we had a high amount of demand, which more or less depleted the amount of houses for sale. Again, this year, huge increases, again, up by over 60%. Also, new listings, look at this, down by 26%. But look at this, 2022, 2021, decreases by single digits. Also, this is a big outlier as well. The number of reduced price listings increased by triple digits, whereas the past several years, we saw decreases compared to the previous year. In my personal opinion, the best week we should be looking at is actually for 2019 compared to 2018. Because back then, asking prices increased by 7.6% compared to 6.3% right now. Housing inventory increased by 5.2% compared to a 61% increase this year. New listings were down, and also the number of reduced price listings decreased by 2.5% compared to a giant increase of 129% this year. Okay, I know that was a lot to cover in today's video, so here's a summary for you guys. Number one, asking prices in the US only increased by 6.3% last week. That was the smallest increase since June 20th of 2020, obviously right after the onset of COVID. Number two, the growth in housing inventory has been decreasing for 4 out of the last 5 weeks. On top of that, last week, housing supply increased by 61%. However, inventory has been more or less on a downward trend ever since November last year. We're currently at the lowest levels going back to June last year. And I'll share a chart with you guys regarding housing supply here in just a little bit. Also, new listings have been declining by double digits for 30 out of the last 32 weeks. The continued lack of new listings is causing housing supply to stay at historically low levels compared to pre-COVID here. So speaking of historically low housing inventory levels, take a look at this because housing supply is at more or less 419,000. This is actually the lowest levels going back to more or less right here, mid-June last year. The lowest amount of houses for sale going back to mid-June last year. Having said that, at 419,000, this is much higher compared to 12 months ago when there was 240,000 houses for sale, and also back in 2021 when there's approximately 317,000. But when I say we have historically low inventory levels at 419,000 right now, this is much lower than the 720,000 that we saw back in March of 2020. Also back in 2019, it was about 817,000. And in mid-March of 2018, there was around 790,000 houses for sale compared to around 419,000 right now. All right, going back to our summary here. Number three, mortgage rates in general had been on a downward trend this year until we hit February. The average 30-year fixed rate has increased by 1 percentage point compared to last month, going from about 6% now to around 7% on average for an average 30-year fix for people with exceptional credit, of course. So the issue that home buyers are facing right now is that rates have been rising much faster than home prices decreasing, which is causing a lack of housing affordability or affordability to get worse. Number four, we saw a huge increase in the number of reduced price listings over the past few months, and of course, triple-digit increases in 16 out of the last 18 weeks. However, though, the share of price drops has been on a downward trend since mid-November last year, and this could be from housing inventory decreasing over the past 4 months. And number 5, houses are taking longer to sell compared to same week 1 year ago for 31 consecutive weeks. Again, though, this is a lagging indicator. So what are some potential huge changes ahead, given the fact that rates have been at or above 6% ever since October 1st, and rates have increased approximately 1 percentage point over the last month? Number 1, average rates right now are around 3 percentage points higher compared to 12 months ago. This, of course, causes a 30% decrease in buyers' purchasing power. And because of that, housing affordability is still an issue. It was improving when prices and rates were going down, but rates again have increased approximately 1 percentage point over the last 30 days alone. And as I mentioned in previous videos, someone looking to buy a $450,000 home, putting 5% down, that's going to cost that home buyer approximately $300 more per month to buy that same home today compared to the early February this year, approximately 30 days ago. And obviously that's a significant increase in one single month, an increase of $300 per month. Rising rates, of course, could and should decrease demand further in the weeks and months ahead. Again, though, time will tell. I'll definitely keep you posted. Number 3, based on my own analysis of the National Association of Realtors data, analyzed home sales in January fell to the lowest levels going back to October of 2010. Obviously, we need more data, especially during the spring home buying season, in order to gauge where our housing market's headed. I think one thing that's almost certain here is that the direction of our housing market this year is going to be highly rate dependent. If rates stay at or above 7%, for example, I would be shocked if housing demand were to increase this year. And number 4, to combat inflation, the Fed raised rates by 25 basis points on February 1st. This, of course, increases interest rates for HELOCs, new auto loans, and credit cards, of course, as well. We're seeing inflation start to wind down just a little bit, but it's remaining very, very sticky. The street is expecting a 50 basis point rate hike later this month, which is in about 2 weeks from now, followed by 2 consecutive 25 basis point rate hikes over the next 2 meetings by the Fed. In comparison, of course, the Fed raised rates by 75 basis points 4 times last year. And of course, how much the Fed decides to raise rates depends on inflation data in the months ahead, so a lot could change, of course. Mortgage rates are likely to stay elevated until inflation shows signs of slowing down, and that will put downward pressure on home prices in the near term. Number 5, how will home buyers react to the fact that rates have surged to over 7%? In my opinion, we'll probably see an increase of cancellations and more home buyers who are waiting on the sidelines. However, the MBA reported yesterday a slight increase in the number of purchase applications to buy houses. That's coming off 2 consecutive weeks in the slowest demand of applications for home loans to buy houses since 1995. And that was a 28-year low that we saw for the previous 2 weeks for mortgage applications in the US. And number 6, we're starting to see some early signs that demand is once again decreasing. Again, mortgage purchase applications have decreased in 4 out of the last 6 weeks, and we're still down by about 42% compared to 1 year ago. But new home sales, which of course is when a home builder and a buyer sign a purchase agreement, new home sales have been increasing slightly over the past 2 months, and that was based on data from the US Census Bureau for December and January. Also, as I've been telling you guys, it was my forecast that we're going to see a decrease in home prices on a national level compared to 12 months ago very, very soon. And in fact, last week, Redfin reported that home sold prices decreased by 1%. So the median sold price is down by 1% compared to 12 months ago. Also, in my personal opinion, we probably will see double-digit decreases in home sold prices very, very soon. I imagine we'll see that in Q2 of this year, and if not Q2, probably the third quarter this year, a decrease by double digits in home sold prices nationwide. And number 8, I appreciate you guys watching this video and supporting my YouTube channel. Hope you guys have an awesome day and look forward to seeing you on the next video.